You know every time we speak, it's no apologies. This is Wicklow Healthcare Advisory, presenting industry insiders, brought by Bill Murray. He help you in a real hurry. From ownership to healthcare, he an advocate, teaching you how to buy and sell practices. From CPAs to attorneys, all guests, here to help you with your goals. You never know who's on next. This is Wicklow Healthcare Advisory. Let's go!
Let's go! Welcome, everybody. Episode 10. If you would have told me when we started that we'd have 10 episodes going of Industry Insiders, I would have laughed and told you were crazy. But here we are, episode 10 of Industry Insiders. Thank you for all our listeners and everyone watching online. It's been a really great experience, and I hope you're getting as much out of it as I am, because it has been great to get the feedback. It first started with the intro music, and now actually some of the content is getting some good feedback. So we appreciate that, and again, appreciate you listening and spending a half hour with us today. Most importantly is our guests, and we have two fantastic guests today that are industry pioneers in finance. These gentlemen have worked in several large organizations. They focus most of their efforts in veterinary financing. So today we're going to focus a lot on the capital required and how lenders go about assessing risk, different levels of risk that some banks and other banks look at when they're looking at transactions, and what makes this lender particularly different than some of the other lenders that are out there today. Because I think most of you veterinarians and dentists that are listening too, you realize that access to capital, the things that you try to do in your daily lives, access to capital is required in just about every single one of them. Whether you're buying a practice, scaling your enterprise, even selling, buyers need the access to capital, starting up, most of those things, even if you're just buying some equipment today, most of those things cost significant dollars, and capital and loans and lending are a very vital part of your business. So I'm very excited today to have two excellent guys on the call that really do a great job in the marketplace of being leaders in how you go about lending to veterinary practices. The company's name is Provide. Cary and Bert, come on in. We have Cary Crego today. Cary, how are you? Good to see you, sir. Bert, great to see you as well. Cary is one of the directors of credit at Provide, and Bert Hockenberry is the national sales manager at Provide for leading their efforts in the animal health division. So welcome, guys. It's great to have you on.
Yeah, thanks for having us.
Thanks, Bill.
Awesome.
Great to see you.
Yeah, great to see you guys as well. I mean, we've seen each other at a lot of industry events, but it's nice to connect and just really talk about what's going on in the industry. The industry is kind of always evolving and changing. And one of the things that I've appreciated in working with you and your teams is that you guys also evolve, and you guys also look at the marketplace regularly. So first, before we get into all that, can you just, Cary, can you just talk a little bit about Provide and what Provide does in the industry to help veterinarians as they look to access capital?
Yeah. So Provide, has joined the ranks of the healthcare lending group, within the last 7 years. From a veterinary perspective, probably about 4 years ago, we got deeper into the veterinary vertical. I came over from a different financial institution to stand up the credit side of veterinary lending, because it is different, other healthcare professionals. So Provide has kind of come to the market with what we feel like is innovative products, whether that be enhancements to startup products, acquisition products for first-time practice owners, established doctors. We feel like we have a great product offering for expansions or conventional ground-up construction projects for our established clients. And then most recently, over the last 18 to 24 months, have really expanded our focus into SBA lending for our veterinary clients as well. So when you take a look at the landscape, we feel like, from the startup clients through our SBA clients, we kind of have a vast array of products that are out there for all types of lending needs in the industry. I think that's something that definitely is a strength for Provide and Fifth Third Bank overall, in this veterinary vertical for sure.
That's great. And, product is one part of it. You have to have product, but then the delivery of those products. And Bert, that's where you and your team come in. So talk a little bit about, Bert, your team and how you guys interface with veterinarians and the industry and really bring those products out to the marketplace.
Yeah, it's I don't think it's lost on anyone that applying for loans isn't necessarily the sexiest thing you're going to do in your life, right? So I think, one thing that we do very differently here at Provide is the technology and trying to make that experience for the veterinarians a lot more comfortable, a lot more seamless than the traditional loan process, right? So I think, we have a group of 8 people nationally that are working exclusively with veterinarians, but we've really tried to kind of create and continually refine a process where it's relatively extraordinarily easy, right? To go through the loan process, to be able to pre-qualify, have a conversation with your lender about ability and access to capital, and just from there kind of catapulting into the loan process, and hopefully that's as seamless as the application process.
No, it's funny. We recently closed a transaction. We had a large loan in the New England market that we closed with Provide. And one of the things that we noticed on our end was, we had dashboards and the uploading of information was different. And, I used to, I hear the word fintech, and as a consumer, I always think like fintech, like everyone's a fintech. But like when I actually was able to interface with some of the technology you have, I started to understand it a little better. And I did notice, like in talking with the buyer on that, I asked questions like, how was this experience? Was it really easier? And the answers that I got were robust. Like the buyer was like, it was the easiest start of the process that I have experienced. And she was talking to a couple different lenders and said one of the reasons why she went with Provide at the time was because it just seemed and was an easier way to get information back and forth. And the communication was even the automated communication, it seemed, was very, very detailed and was always about engaging the customer into the process, right? This is what we're missing. This is what we've received. This is what is still outstanding. I thought that process for me and the introduction of that technology and actually using it was very interesting, especially coming from my banking background, where we were still writing wet signatures and doing documents the old-fashioned way. So it's interesting. So can you talk a little bit, Cary, about what does the technology do behind the curtain, right? So you've got these products, you've got these services. How do you guys use that technology to maybe speed up your process or help in underwriting? How does that all come together in the back end?
Yeah. I mean, it starts with the pre-qualification process, right? Our borrowers are able to pre-qualify. Let's say they're not even ready to, target a practice yet, but know that they want to step into acquiring a business eventually. They're able to pre-qualify, soft credit pull in the system, enter just a shell of information about earnings. We pull a credit bureau to see if there's any issues there. They talk through liquidity that they may have on hand at the time, and they're able to kind of set up their profile in our ecosystem. From there, there's a number of different ways. Bert and team will partner with industry partners to find practices, but we also, in our practice marketplace, allow clients to go out and see, with our industry partners, what inventory is out there available in their area, or maybe it's a relocation and they're moving to a new area. They're able to see what that market looks like. So pre-qualification kind of gives them a clue into credit worthiness. How big of a practice would they qualify for? The marketplace allows them to kind of pair those two things together, and it really creates for a better experience as they're coming into the formal credit application process. Once that credit application process kicks off, we're really, speed to market we know is vital in this industry. So we're really trying to use those tools to get a more efficient overall package into our credit team, where we'll do, a credit interview, do our analysis, and really try and turn around an application at industry market speed. It typically a week, when everything's in a steady state, we can turn back a deal and kind of keep the process moving efficiently. From there on the back end, the same ecosystem carries through to closing, where inside sales will hand off to a closing partner who is a dedicated person to help that client get to the finish line. And all in all, we've seen the use of the technology, which we own and we update, customized for healthcare professionals. It really creates a more efficient end-to-end process from that pre-qual process all the way through loan funding and then the start of the relationship with.
That's great. And Bert, it sounds like, and what my experience has been is it's not that you've like recreated the wheel. The stages of getting a loan are still very similar. That hasn't changed. But what it sounds like you're doing is you're taking like a human touch with your outside sales team and introducing technology to help that communication along and to help speed up that process to make it a little bit more user friendly. Is that is that the best way to describe it?
Completely accurate, right? And ideally, Bill, right? The doctor, Cary mentioned the prequal, 3 to 5 minutes, soft credit pull, so it's not score affecting. But if that becomes the like initial foray into the loan process, then our outside salesperson, our regional manager, has the ability to have a more focused conversation with that veterinarian or dentist, right? Where we're able to see if there's any kind of holes in the process, anything that needs a consultative conversation around it. You're able to kind of have that early, and then that person either knows that they're prepared to continue through the process, or that there's some things that they need to work on that they can go address.
That's great. So the technology's there and you're putting out into the marketplace. It's, hey, this is going to be an easier process. It's going to feel a little bit easier and the communication will be there. One of the things I wanted to touch on is that, SBA is a new thing that you guys have been talking about, right? So it does, in my experience in the past, if I was a buyer of practices, I went and I wanted to go conventionally, I went to one bank. And if I wanted to go SBA, I went to another bank. And there were different levels of choices, but it was very interesting that some banks did SBA really well, some banks did conventional very well, but there hasn't been one in my mind that does both of them very well. So can you talk about the SBA launch and kind of what the goals are there and where you are with that product?
Absolutely. So, I mean, the launch of SBA was kind of an extension of what we wanted to do on the conventional side. I think when Bert and I made our way to provide to kind of work with veterinarians here, it was all about providing access to the largest number of practitioners possible, right? We were able to be innovative on whether it was the startup side, the acquisition side, again, conventional ground up construction side. The move to SBA was just another step in that direction where we felt like we would be able to be an industry leader with our technology and then just expand the amount of offerings out in the marketplace to the maximum amount of practitioners. And it's been met with really strong response in the marketplace, which has quickly moved us up to the number 2 healthcare SBA lender in the veterinary vertical in a pretty quick amount of time. Big credit to the 2 underwriting managers that work with me on the SBA side. They've done an amazing job adapting our ecosystem to SBA lending. And that's just been a great success. And again, just allows us to get financing out to as many practitioners as want to take on that challenge of entrepreneurship.
Great. So yeah, Bert, talk to me a little bit about SBA and how your team is now kind of focused there and what they're doing there to make that work.
Yeah. So, kind of building on what Cary said a little bit, I think our goal when we came over to provide is try to find as many solutions as possible to cover up what we felt like were the holes in the veterinary lending space, right? And I mean, we could get into a number of different things, but there were a lot of, I don't know, I would call it underserved products or opportunities out there. And when we, came here to build this out and grow it, our thought was, let's focus on those things where it makes sense to provide as many opportunities as we can for veterinarians. And I think SBA, Bill, has been a huge part of that. There are so many outside the box opportunities where it doesn't fit into a traditional conventional structure, or there's some nuance to it where it wouldn't necessarily fit conventionally. And to have a product there that has the opportunity to kind of catch all these, different transactions that didn't normally have a firm home in the conventional world has been a huge thing, not just our growth, but more importantly for the veterinarians that we serve and allowing them to have access to capital, really in almost every foreseeable, opportunity.
Totally. In my lending days, I think I spent way too much effort and time trying to force an SBA loan into a conventional product, right? I think what I've learned, and it took 27 years to do it, but I think what I finally come to is that there are absolutely loan types that need to be serviced by the SBA product, right? Ground up construction is probably the first one that comes to mind. Trying to do a ground up construction project conventionally is not easy. And it's mostly because there are so many unknowns when you break ground, right? So when you think about ground up construction, that's one of them. And then also, like, there are just kind of practices and opportunities where it's a good opportunity, but maybe you're not willing to take on all of that risk as a bank, right? There might be an issue with the buyer, there might be an issue in the practice, but we see as a deal together, there should be a place for that to get done. It sounds like you guys are trying to solve for that and are on your way to doing it, which is great for the industry.
Yeah, the conventional to SBA pivot is something that in the marketplace is, like, to your point, it's a pain point where you're maybe flipping lenders. We feel like that's an easy switch. We can take a look conventional. Maybe we don't get there. It's a quick amendment of the process, and we have an SBA offering. And we definitely feel like that's a value for the ecosystem that's around the actual practitioner, but then most importantly for the actual practitioner as well. And like Bert mentioned, it's been met in the marketplace very, very well, and we feel like it's a definite growth initiative here.
Awesome. That's great. Well, congratulations for that. Want to pivot a little bit and talk a little bit about kind of customers and what you're seeing today, and what are some of those pieces of advice you'd give someone that is looking for a loan. So we're going to focus a little bit on lending here. So Bert, when your team interfaces with a client that is looking to do a startup or looking to acquire, so they're that first time associate, they're not sure which path they're going to go down, but they know that, hey, I want to be an owner at some point in the next year or two. What should they be focused on, and what advice would you give them as they start down that path?
Yeah, and it's, I mean, for me, I think it's been repeated a bunch of times in some of your podcasts, Bill, right? Like, you have to trust the team, right? So I think building that team around you and really having, the end in mind as you begin, right? So going a little bit deeper than I just want to start a practice, or I want to do a startup, or, I want to acquire a practice. Like, what are your future goals? Do you want to do multiples? Are you looking for a one doctor practice, right? Like, all of those things that are part of your decision-making process need to be addressed on the front end, having a consultative conversation, starting with your lender, but then bringing in the team of people, and aligning with people that are going to support your angle or your vision as you get into practice ownership. So for me, I know it's been said many, many times. I mean, it's because it's the most real piece of advice that's out there, right? Like, you have to, when you get into something, you need to be thinking not just of the next 2 or 4 or 6 months, but you need to be thinking of the next 10 or 20 or 30 years, and align with people that are going to be supportive and equipped to help you with that process.
Great. Cary, from an underwriting perspective, I think one of the things that we hear from associates is that they get deterred from ownership opportunities because of their student loan debt, right? They're like, I just graduated, I'm 5 years out, and I still have $275,000 in student loan debt from one of the Caribbean schools I went to, where I went out west, and I also had to live my life and take additional loans out. What is some of the advice you have for those associates that have that ownership drive, but are right now just saying, I don't know if they can do it because of all of these other things I have going on?
I honestly would say relax. I think it's a necessity of the industry for a lot of people who don't have parents who can pay for vet school. In our mind, right, we understand that that's part of becoming a veterinary practitioner, is going out and taking on student loans that can be intimidating. So from our end, it's not really a deal killer in any capacity. I would say it's the other things from a debt profile that can be deal killers, right? Credit card, accumulating revolving balances, mortgages that maybe you're stepping up in lifestyle to take on that first home when a starter home may be a better option, excessive automobile loans. Like, those are the types of things from a character profile we're looking at. The student loans is just, it's part of this industry. It's part of becoming an entrepreneur. It's part of just becoming a veterinary practitioner, and we are absolutely aware of it.
So for our associates listening today, you just heard from a director of credit that they don't necessarily care and actually expect to see your student loan balances where they are. And if I could take one thing away from that, it's if I'm going to focus my effort on paying down debt, focus on credit cards, focus on other loans outside of student loans, which typically would have some of your lowest interest rates or programs available to help you manage them, like income-based repayment for federal loans. Just manage things the right way. And if you have some debt, focus on paying down the things that probably cost you the most and are the worst types of credit to have. Credit cards being a number one, right? Credit cards are sometimes a necessity, but I mean, we all work for a bank at one point, and you probably they get Fifth Third Bank mail, I'm sure, open up a credit card. But the fact is, like, it's the worst debt you could possibly have. So focus on paying that down first. Great advice. I'll move it to, in my world, I deal with a lot of sellers, and obviously with sellers, we have to deal with potential buyers of practices. What is some of the advice you have, Bert, and your team? What does your team say to help a buyer make them look more attractive to a seller? If there are multiple buyers in a transaction that are vying for a hospital, what would you say they can do to make themselves kind of rise to the top there and become that viable candidate?
Yeah, I think, right, again, kind of going back into the pre-qual conversation, the fact that, Bill, looking at it through your eyes, right? A potential buyer comes to you. I've had a conversation with my bank. On my side of the equation, I am qualified to acquire a $2.5 million veterinary practice, cash flow permitting, right? All of the stuff that you deal with. I think from your standpoint, to be able to interact with buyers that come to the table prepared, that have a vision, that potentially have had conversations with representation around them, just kind of goes to the seriousness of the way that they're attacking this opportunity. I think, again, looking at it from your perspective, to have someone like that kind of stands out versus everybody else, right? And you kind of make like the analogy, or draw the analogy to like an open house, right? You're selling a home and you've got a bunch of people that just want to walk through and see. You have a finite amount of time. You have a lot of things on your plate, and want to make sure that you're protecting your buyers, your sellers' best interests. And the people that are coming through that are showing interest are very serious about it and have done the homework up front to be able to attack that opportunity.
That's great. Just to be clear, if someone came to me and said they were pre-qualified to buy a practice for $2.5 million, I'm probably not talking to anyone else at that point. I'm just going to focus my efforts there. Just FYI, Yep. And I'm going to say, where do you want to be? We'll find you one. But you're right. It's, as I think about how I interact with buyers, I shouldn't say first question, but what I look for is not only are you pre-qualified, but have you built out your team? So my first questions are usually, have you talked to a bank, and who else on your team have you put into place? And if a buyer says to me, I've been pre-qualified with my lender up to $1.5 million or $1 million or 800,000, whatever that number is, I also have an attorney and a CPA in place ready to go. If you have those three people and you're able to articulate who they are and that they're ready to go when a new opportunity presents itself, you immediately rise to the top in my world. That's great. That's really good. Anything else on the provide side? Like, what else, when you think of listen, there's a lot of banks in the space, right? Everyone wants to lend to veterinarians, dentists, medical, everybody, whether you have a specific team or not, everyone is trying to vie for this business. What are some of the other competitive advantages you'd like to highlight for associates and owners that are listening today that are going to need capital here in the next 6 to 12 months?
Yeah, I think it goes back to and begins with the technology and that initial client interface. Then it's the people, Bert's team or the credit underwriting team or the closing team, the product offering. But then I think it's also the ancillary products. We are trying to create a relationship here with Provide and Fifth Third. It's not just a transactional thing. So to Bert's point earlier, we're looking to be with that client, from onset for 10 to 20 years. Understanding the product offering will allow for that expansion into future opportunities, but also, physician mortgage program that we have. We have a great back-end healthcare banking team that deals with deposits and other ancillary products. and just feel like kind of once you enter the ecosystem, it's a well-rounded relationship and not just here, let's do your loan, see you later. And I think there are definitely places out there that operate that way. And I think we've taken a pride in not doing that and really creating a long-standing relationship with every client that kind of chooses to do business with us.
Have a Wicklow wisdom. For those listeners that haven't been to the site or been on LinkedIn, I'm starting these Wicklow wisdom, which are very short kind of bites of information. And I'm talking about choosing a lender next week. And one of the things I said was it's not just about the loan, and certainly it's not just about the interest rate. It's about the platform, because you're going to need your lender for the next 10 years. You have to do banking. You need a credit card. You need all of these things. When I launched Wicklow, that was one of the things I was like, who am I going to partner with that has this platform available that I can use for the next 10 or 20 years? I think associates, especially first-time owners, get so wrapped into the loan because that's the number one need. I need someone to say yes to me and give me the money. But then after that, what's the platform look like post-sale? Because this is a relationship you're going to have for a long time. Can you guys just, and then we'll move into what's your Wicklow, because I'd love to hear both of you, and I'm sure they're going to be very, very, very amazing. But can you talk a little bit about the relationship of Provide and Fifth Third, right? So that's a name that's come up a few times. Can you talk to us about your company and what that relationship looks like so people understand?
Yeah. Provide obviously is the healthcare specific arm, right, of Fifth Third Bank. Fifth Third purchased Provide back in 2021, right? And at that time, we were, to the point you just made, Bill, we were more focused on practice loans. And so with that, marriage of Fifth Third and Provide, it has kind of opened up the opportunity to do much, much more and add much more depth to the relationship. So, things Cary just touched on, and I think it's very important to me is that if you're a veterinarian, it's interviewing your lender and it's understanding what doesn't happen at the reception desk, but what happens in the exam room. That, right? The banking analogy here is the interest rate or the loan is kind of the exam fee. You get into that room and that's where the proverbial magic happens. That's where you create your difference, right? So from there, the depth of relationship. And I think that synergy, right, and the engagement with Fifth Third has allowed us to create some really innovative products from, credit cards with, 3% rebate cashback on veterinary acquisitions, right? The accelerated merchant products and business savings account. And to Cary's point, right, having a mortgage program in place for veterinarians that are going to be first-time practice owners that are self-employed or going from W-2 to self-employed is a hurdle at times, right? So the bank,
most banks will say 2 or 3 years, right? I'm not going to give you a mortgage for 2 or 3 years. We don't care that you need a house.
That's it, right? Like that's it. And it's good. Live in the practice, but don't, right? But it's a continuation of just doing things and filling holes to basically cover every situation for veterinarians. And I think Fifth Third and that relationship has been integral in allowing us to do that here, in our division.
Great. So it sounds like that marriage between Provide and Fifth Third really enabled the platform post-sale and continues to drive innovative products, innovative ideas on how we can help fulfill all of the needs of the physician, veterinarian, and dentist owners that we have on our books. That's great. It's good to see. It's really interesting to hear and actually see how deep the company thinks about all of the financial services that healthcare practice owners need, right? It's not just about the loan. It's about the platform post-sale, banking products, credit cards with 3% cash back on supplies. Those are things that you just don't necessarily see everywhere. So it's really nice to see a company that's putting those things at the forefront like you guys are. So again, congratulations on all the success. I'm happy that you guys came on today. As part of our podcast, we always ask, what's your Wicklow? What's that retirement dream look like? I'll ask Cary first. Cary, you're younger than I am, so you've got a ways to go. Although I think my kids are younger than yours, so I actually probably have further to go than you do. So, Cary, I'd love to hear, what's your wick?
Yeah, I mean, I think it's two things. I think there's kind of professionally, there'll be a day when I'm out of banking, but I don't see myself being the guy who is on the golf course all the time or traveling. So to me, there's a professional goal of probably in retirement actually taking the leap into entrepreneurship. I had no idea what that's going to be in, what type of business, but the idea of kind of doing that, betting on yourself like you have, Bill, is kind of exciting. So I could see myself definitely doing that. The biggest part I would say of what is my Wicklow would be just surrounded by my family. 3 kids. My parents were at literally every single big event in my life, every grandkid event, musical, everything like that. So I think that's the goal for me is, with my 3 kids, as they start to have big events and grandkids, I fully expect to be the crazy granddad that's cheering as little Timmy hits a home run or at a musical for my granddaughter. So those types of things, it's really, it's kind of a big part of my value system and definitely something I see my Wicklow being as I finish my professional.
Awesome. My 5-year-old came home yesterday and said that Kenny at her preschool told her she was pretty, and I immediately went bright red, got mad, and wanted to find Kenny. So the thought of grandkids I think you probably saw me start flinching there. That was a little too early for me, but that's awesome, Cary. And I know you're a big family guy, and that's great that you want to provide that for your kids as well. That's a great Wicklow. Bert, tough to follow that up, dude. You're gonna have to come with something different, I think, because you were about, I just want to golf and be at the beach. Like that.
And in fairness, I'm a lot closer to it than Cary is, Bill. Like years and years and years closer than Cary is. I think a big part of what I see myself doing, right? Like, again, it's going to be hard for me to completely pull away from this industry, right? Been working with veterinarians for the last 15 years, have grown to love this industry, the people I work with, right? An amazing team of people, but more so just the veterinarians and all the interaction in the marketplace has been, such a exciting part, I think, of my life. To Cary's point, would like to stay in it to some degree, right? But I think, you kind of nailed it. We'll probably move towards the beach. I don't have Kenny chasing my 5-year-old daughter. I have Connor chasing my 17-year-old daughter. So I'm at a very advanced stage of where you're at right now. And, I think to have a place, right, on water, maybe near the beach. I love to boat. I've never actually driven a boat, right? But like to have a place where my daughters, as they get older, can come spend time with my wife and I, right? Do things as a family and enjoy kind of the benefits or the rewards of, all this hard work we put in for all these years. Yeah, I think that's where my mind goes. I'm just not quite ready to get there yet, but close.
Yeah, but close. Getting closer every day. Did you hear that, Chad? Did you hear? Well, listen, guys, it was just a great conversation today, and I really appreciated you having me on. Bert, if someone wanted to go check out Provide, could you just give the website for those listeners that aren't online? And we'll have certainly the information to contact you guys on the end card, but just give out the website, and that would be great.
Yep, it's www.getprovide.com.
That was the inspiration for GetWicklow.com. I thought GetProvide.com was awesome, and I was like, I'm just going to name it Get Wicklow. I hope I don't get in trouble with some type of copyright issue there. For those listeners that want to reach out and need financing, I would say Provide, again, is doing a really great job. We've closed a couple loans with them this year. Thankfully, in Wicklow's first year, we've had some early success, and Provide has been a part of that. So thank you both for coming on. For those associates and owners looking to get to Provide, it's www.getprovide.com. And Bert and Cary's information will be here at the end. But again, gentlemen, great conversation. Appreciate what you guys do for the industry. And thanks for having you on, and have a great rest of your week.
Thanks, Bill.
Every time we speak, it's no apologies. This is Wicklow Healthcare Advisory, presenting industry insiders, brought by Bill Murray. He help you in a real hurry. From ownership to healthcare, he an advocate, teaching you how to buy and sell practices. From CPAs to attorneys, all yes, here to help you reach your goals. You never know who's on next. This is Wicklow Healthcare Advisory. Let's go!